Hey everybody, this is Tom Nash, and in today's video, we're listening to Ron Baron, the billionaire investor, and what he has to say about Tesla, the target price, and the outlook for the company. And without further ado, let's watch the video, and then I'll give you my honest response.
Back in 2014, right? 2014 was your first purchase of Tesla?
So I met him in 2010.
Yeah.
And when I was interviewing, and I say we invest in people, bet on people. And when he was at our annual meeting last year and I was interviewing him, he says, well, it took you quite a while to invest in me. It was 4 years, actually. So in 2010, I met him, followed it. 2014, after the stock had gone up, I don't know, 3 or 4 or 5 times, 6 times. At that point, we started investing. And we invested.
Why? What finally dragged you in?
Well, I kept following and kept going to visit him, and finally he was telling me, gee, we're going to grow 50% a year in units as far as the eye can see. And he was doing 31,000 cars a year then, 31,000 cars. And ultimately, we had this meeting for a couple hours in Fremont, and I walked away with Mike Lippert, and I said, man, I can't believe I don't own this yet. Stock was $80 on the way to 200, up from 25 where it came public. And then we split since then.
Yeah, you've ridden this. I mean, we're looking at the long-term stock. You rode that all the way up. Yep. We're in it all the way down, but then back up again, which is what we've seen this year.
We're not quite all the way down. So we invested $380 million, and we made about $4 billion so far.
Wow.
And we've cashed in about $1.5 billion. We sold for clients 6.8 million shares. Yeah. Three years ago at $225 a share. Up 15 or 20 times, and we now have 17.5 million shares, and I think we're going to make 6 or 7 times. I think the stock is now 225, 230, 250. I think it's going to be 500 in 2025, and I think in 2030 it's going to be 1,500. That's my targets.
I think when you sold because you were worried that it was becoming such a huge part of your portfolio. It had risen so much, and I think at the time you told us you wanted to. It was part of your mandate as your funds. You couldn't have one stock be such a big part of your portfolio.
I wanted people to know that I hadn't died. And, that's why they still own the stock. So I just, and I was getting criticized for being such a large holding. And I don't normally buy stocks. I haven't really since 1992. I've been investing in our funds. But I am allowed to buy private companies. And I have a big investment in SpaceX. But in Tesla, I own personally 5 million shares. I bought it after all of my clients had bought their stock. And I said to the board of our mutual funds, I said, look, I'm not going to buy stock for myself any longer. I'm only going to invest in our funds and in private deals. But in this instance, I think we're going to make 20 times our money. I'd like to invest $50 million. And if that works out, then Baron Capital will be stronger financially. And if it doesn't, I can afford to lose. It wouldn't be pleasant, but I will take the chance. And I said that if you approve this, I'm the last person to buy. I'm not taking anyone's opportunity. I tried to get everyone else to buy, and I was in fact successful. I'm the last one to buy, and I will be the last one to sell. I will not sell a single share for myself until I sell for all my clients. Last in, last out. Okay. And so I bought for the clients. We sold about a quarter of their stock. I haven't sold a single share personally.
It's now $4.5 billion, your holdings in Tesla. That's more than 10%. If you've got $41 billion in assets under management, it's now more than 10% of your funds. Does that get you back to the point where you start to worry it's too big again? Would you sell again for your clients so you're not too beholden to one stock in your funds?
It's a little bit less than 10. I think that, no. It's not anywhere near. I've been very careful about explaining to people about the funds that do own this stock and the clients. The clients periodically call up and they say, it's a little bit too much for me. Can you sell a little bit? Whatever they ask, I'll do. And I told them, I think that you're going to make from these levels a double in the next 3 years, and you're going to make after that, you're going to make to a triple again. So you can. I think you're going to make 7 times your money over the next 7 or 8 years.
Andrew's got a question too. Andrew?
Oh, I'm going to get
Ron,
to why.
I was so curious if you'd explain what your thoughts were on this opening up of the charging stations that Tesla is doing. It's such a remarkable thing, and I think great for the country. Should be good for Tesla, but could cut both ways in that it's also creating opportunity for Ford and General Motors.
I think that It's not that big a deal economically for Tesla, but it's going to make more charging stations available, so people will be less worried about buying an electric car, thinking that they will be able to charge it wherever they go. Most people charge their cars at home at night, so I don't think it's that big a deal. But it will. There's 4,500 stations right now, and 45,000 chargers, plugs. This is better technology. It's faster technology. It's going to make people. His whole idea is to transform our country and the world to electrification, to electric cars, and this is helpful. So basically, you buy a Ford, you buy a General Motors car, you're going to be able to charge your cars and not worry about it because there's going to be a lot of stations you're going to go to, and it's going to make it clearer that this is a really coming thing, and you have to. Everyone's going to. You know what's really interesting as well is that most people would perceive Tesla as a rich man's toy, as a car that's very expensive. The average car in the United States is now $48,000 a car. $48,000 a car. Last year, Tesla cars were $50,000 without a subsidy. This year, they're $40,000 with a $7,500 subsidy, and therefore, they're $33,000. $33,000 you can buy a Tesla where you're buying a regular, and that's like a BMW, better than a BMW 3. And so, the Tesla Y is the biggest selling car in the whole world. The Tesla Model 3 is $33,000. And you compare it to any car. So this is not a Toyota Corolla or a BYD. This is a Tesla. And when you're buying this car, you get an amazing value. So it's absurdly cheap, $33,000 for a car. And people don't realize how cheap it is. So number one is really cheap. Can I talk about the growth opportunity?
Yeah, I just want to make sure we get to some other stocks too. So yes.
Okay, I'll be conscious. Okay. So the idea is there's only 6% of cars that are now electric, and so there's 94% that aren't. There's also a 2 billion car fleet. 1% is electrified. So there's a really big opportunity for growth. Number one, the charging stations. That's an important deal because everyone's going to now know that they can charge their cars everywhere. Insurance. That's another thing that just helps people buy cars. Tesla's return on investment. So most companies, when they make an investment, they make a 15% return on capital. That's target. They won't make an investment unless they can make 15% return on equity on the investment, on capital. Tesla, when they were making a profit of $15,000 a car, they built a plant for 1 million cars, and it cost $7 billion. And that plant would make $15,000 in profit a car. They're making $15 billion on a $7 billion investment.
Ron, let me just interrupt for a second. Morgan Stanley, Adam Jonas, yesterday, he's been a big bull on this stock for a long time. He downgraded it because he said the price is just too high at this point. Still likes the company, but just says it's run pretty far, pretty fast.
Adam's clients are hedge funds. And basically, we sold our, so it's unusual that the stock went down the day before.
Are you suggesting the hedge fund clients had that information the day before?
No, I have no idea. But you're talking to someone all the time who has an opinion, an analyst, and he's trying to generate brokerage commissions. I'm trying to be a long-term investor. Long-term investing, that's what we're about. And
so when the stock goes down like it did last year, you don't worry? Because you figure eventually it's going to right size again?
The most amazing, I was not worried. But for clients, the stock went from 300 to 100.
Yeah.
It's now 225, but 250. It's the same price it was 3 years ago, and the business is 3 times bigger. The business is 3 times bigger now. Now they're going to do 2 million cars this year. 3 years ago, they were doing 500,000 cars when I sold our 6.8 million shares. So basically, it's the same price it was 3 years ago, when the business is now 3 times bigger. And so a guy could say, I have no idea if it's going to be higher or lower in the short term. Elon spoke in Paris at a conference last week, and he was with Arnaud's son. And Arnaud's son said to him, Elon, our businesses in the aggregate, LVMH, are 6,000 years old. You're a teenager. How can you stop? When are you going to stop embarrassing us? With your market cap? And he says, valuations are funny. Who knows?
Let's talk about a couple other stocks too. Other things that you like.
So other stocks we don't care about in this video at least. So let's go back to Tesla. So let's recap what Ron Baron said. I have here about 11 points that I jogged down as he was talking. Let's go through it real quickly. Number one, he said he invests in people, and that what his idea about Elon Musk's greatness. Think about it this way. If you invest in a company, the number one thing that turns me off of an investment is the quality of the management, the quality of the founders, the quality of the CEO. So him starting with that, saying, hey, I invested in Elon Musk first, it's a huge sign to me that he knows what he's talking about. To me, the quality of management is probably the most predominant factor of a decision to invest in a company. And I'm the same way. Look at Elon, look at his track record. Investing in this guy makes a lot of sense to me. Very much agree with what he said. Now, he said that Elon told him back in 2014 they're going to be at 50% growth a year at these numbers. That was 9 years ago. Imagine knowing back then what Elon knew, and nobody believed him. Absolutely insane. Yes, he under-delivered a little bit on the timelines. He overpromised on the timelines, but he delivered what he said in 2014, which is another thing that goes to his credit as far as quality of CEO. Number 3. This is really important. So Ron Baron apparently invested $380 million in Tesla. That was back in 2014. Now they made $4 billion off of that original investment. So they 10x their money. They took out $1.5 billion in profits, which means they took their original investment and some. So they took about 3x out of the 10x they've made. And the rest of it is still sitting in. It's actually a very smart strategy. When something like goes multi-bagger on you and you have a 10x, even if you know that that thing is going to go ballistic, and Ron Baron spoke about it, he said this stock is going to be $500 in 2025 and $1,500 in 2030. So he did say that. Even if you think that this is a $500 or $1,500 stock, if it went 10x on you, taking out your original investment and a little bit of profit, what he did here, take out 1.5 billion when you invested 400 because you're already sitting on 4 billion of appreciation that is completely there for you to take. So that idea of whatever happens now, even if Tesla goes bust, Ron Baron already did 3.5 times his money, right? Even if this investment goes to zero. That's smart. That's just smart risk management. I absolutely love what he did there. We teach those things on our Patreon page. Of course, you are more than welcome to join. We have a massive, massive community, more than 4,000 people on patreon.com/Tom Nash. We teach risk management, dollar cost averaging into into good companies. We teach all of these elements for you. So you're more than welcome to check us out. Join. The tiers start at $5 per month. We also have the Academy tier that's closing real soon, so check it out later. The next thing Ron Baron said here is that he said that he got criticized a lot when the share price went to $100, but then again, he didn't sell, right? So you will be criticized by your friends, your family, people around you when things go south about investment. Look at Palantir. When Palantir went down, everybody kept talking about Palantir, how I don't know what I'm doing. Other YouTubers are selling Palantir. All of a sudden, huge bulls become huge bears, etc., etc. But I trusted my process with Palantir. I stayed in. Ron Baron trusted his process with Tesla. He stayed in. Both of us got rewarded, as you can see, which is exactly, again, what we teach on our Patreon, patreon.com/Tom Nash. We teach dollar cost averaging into good companies, ignoring the noise, ignoring the FUD, ignoring all the criticizers and the naysayers. Just trust your process, trust your theory. So I absolutely love what he said there. The next thing he said is that he's not going to sell his own personal Tesla shares before all of his clients sell out. So that's another sign of faith in the company. He said that they still don't have 10% Tesla. He cannot go over 10%. Remember that. So he'll have to sell if they go close to 10% again. Regulatory issues, tax issues, consolidation, a lot of stuff. So he's not going to go above 10%. As far as charging goes, he said, look, it's not. Elon and Tesla is not going to make a lot of money out of the charging business, but it's good for the total, expansion of the total addressable market of EVs. If the network is offered for everybody, then more EVs will be sold. The total addressable market will grow. It's good for EVs, good for the environment, and eventually good for Tesla. But it's not a huge monetary item for Tesla, which we knew. As far as the Model Y, the Model 3, he said, look, I know that everybody talks about the $25,000 car, but in the US, the average cost of car is just under $50,000, and the Model Y is definitely within that range. And the Model 3 is like very close even to the Corolla with $33,000. So Tesla already has cars that compete. Look, Model Y sold about 800,000 cars last year. Corolla sold 1.2 million. Within a year or two, Model Y is going to be the best-selling car in the world, and that's what he was hinting on here. And I have no doubt that's going to happen. When that happens, you'll see another spike in the share price. He also, a little bit of a jab towards BYD, saying, "Well, look, you're paying $33,000, and it's not like you're getting a BYD." And you can hear the discomfort in that brand in his voice. Now, he's still very bullish on this industry because like one of the things he said is that the total addressable market here is still massively open. The adoption rate in the US is like 6% for EVs. There's 94% of the market still wide open, and Tesla is running in the pole position to make it happen. He did say that Adam Jonas from Goldman Sachs downgraded the stock, but he doesn't pay any attention to that because Adam Jonas is a trader, or at least he caters to traders, and the bank makes money off of actively trading stocks. So he's basically saying that you have to take Adam Jonas and Goldman Sachs' opinion with a grain of salt about Tesla, which I totally agree with. And then he basically said, look, the business right now is trading at the valuation of 3 years ago, and it's 3 times better than it was three years ago. So what do? If something is 3 times bigger, 3 times better, and it's trading at the same price it was 3 years ago, I mean, it's a no-brainer, at least if you're Ron Baron. Of course, this is not financial advice, just my opinion. That's what I think about the situation. I hope you enjoyed this video. As always, if you want to learn more about dollar cost averaging into companies, if you want to learn more about the process, about how to become a better investor, not a gambler, not a trader, and of course, if you want to learn more about becoming a better investor, join our private community. It is hands down the best investment community on the planet. I guarantee you that. And if you don't agree with me, by the end of the first 30 days, I'm going to refund you. How about that? We have a massive new project called Tom's Academy. Few spots left. Sign up for that. If not, sign up for the lower tier of the $5 and jump on the Discord. We have a special dedicated room for Tesla on our Discord. Join the conversation, become a part of something great. I'll see you in the next video.